Hello everybody and welcome. I'm Toby Gennaro and I will be your presenter for this evening. The topic for today is trading futures like the professionals. And I'm going to be talking through a general introduction to futures markets and futures trading. So this will be an entry-level session and we'll progress to the more advanced trading strategies that will be available to you all in the three-part advanced education course. So for those of you that are on the live webinar tonight, if you have any questions during the session, please do type those into the question box on your screen. I'll be asking you some questions as well, so we'll try to keep this interactive. If you happen to be watching this via recording in the future and have questions, you will be able to send those in as well, and I'll have some contact information for you at the end of the session to do that. So just by way of formality, let me put up this risk warning and disclaimer, and I'll leave this up for about 30 seconds or so. Please just have a quick read through this. In brief, we provide education only, so we do not give any financial advice. Trading the markets can be risky. It's not suitable for everyone, and you should seek independent professional advice. And if you can't accept these conditions, we would ask that you please leave the webinar and consult our website for more information. Okay, and just one more disclaimer here from RJO. So if you can have a read through this real quick, and then we'll jump in and get started. Okay, let's get going. Now, since this webinar is brought to you by RJO Futures and Trade with Precision, I'll just take a few minutes here to introduce both companies. As many of you know, RJ O'Brien has been around forever, dating back to the early 1900s. RJO Futures is the futures brokerage arm of RJ O'Brien. So RJO makes its distinction in the areas of personal service and client relationships by providing a high level of value-added resources to clients. So services such as market research on a wide range of futures markets, managed futures services, trade ideas and recommendations, and proprietary and partner trading platforms, along with ongoing trading education such as this session tonight. Trade with Precision was created in 2006 by a gentleman by the name of Nick McDonald as a provider of trading education for retail traders. So we are an international team of traders that provide training for some major brands of exchanges and brokers around the globe, and we were able to team up with RJO early this year to bring you folks some specialized education around futures products and trading strategies. So Trade with Precision is a company that is run by traders for traders, and we are specialists in trading strategy education. Now, for those of you that are new to RJO, here's a snapshot of what we'll be doing over the next 8 weeks. And this will be a progressive trading education program that will begin with a series of educational webinars outlining the futures markets and stressing the importance of trading with a strategy. We'll highlight a couple of trading strategies that we use to trade the futures markets in parts 2 and 3 of this first 3-part series. And what we'll do is we'll illustrate, what the strategies are and then how we use them in real time. So there's no cost to you folks for any of this education. This is all being sponsored by RJO. Now, if you choose to go through the initial 3-part webinar series, we'll set you up with a one-on-one consultation with an RJO broker to talk about your trading or your investment plans. And if you like what you see here in these sessions and you want to see more, then you can move on to the advanced course, and I'll show you how to do that in just a minute. Now, the initial 3-part series begins with today's webinar on the basics of futures trading, and it's aimed at those new to trading or perhaps just new to futures trading. This is the first of a complete 6-part series, and we will continue to build upon the concepts in each session. Now, in part 2, trading opportunities for busy people, we will spend some time on how to run a trading enterprise in conjunction with a day job or family life and whatever other lifestyle commitments that you may have. And then I'll spend some time talking you through a trading strategy that we use in the trading room on a regular basis. And a trading strategy is going to be critical to the success and consistency of any trader. And so I'll show you how professionals do this. And part 3, futures trading strategy. This is another look at trading strategies and how you should use them in your trading. So understand how you can use a strategy to increase your probability of success in the markets. And I'll show you another important trade strategy that we use every day and how you can include this strategy in your trading plan as well. Okay, so that's the first 3-part series, which is open to the public. And then for the grand finale, we're going to be doing the advanced education course, which will be complimentary again to all RJO Futures clients. Now, this 3-part course will be a deep dive into everything that you'll need to know about setting up a trading plan and using 2 trading strategies to both define your entries, your exits, and your stops. Okay, so these sessions are going to build upon the trade strategies introduced in parts 2 and 3. Okay, and we'll also take a look at what professionals do to ensure their survival in the markets, and then how they manage risk, and also how they manage their money. So typically these courses would sell for around $900 if you were to obtain these from us on your own, but RJO Futures is providing complete sponsorship on your behalf, so it's a pretty good deal for you, all compliments of RJO. Now for the agenda today, again, this session is an entry-level view at getting started in trading futures. So I want to help you folks understand the how and why of futures markets and what's available to trade. We'll help you determine your trading style by looking at both fundamental and technical analysis, and then understand how professionals approach the markets and what futures markets may actually be right for you. Now, if any of you folks have any questions, feel free to shoot those over to me utilizing the question box on your screen. If something does pop into your head while I'm on the slide, feel free just to shoot it over while I'm on the slide. I'd like to catch and respond to the question if I can while we're still on that slide so we don't have to backtrack. I think it'll save us some time. So feel free to ask whatever it is you don't understand. If I miss something, feel free to let me know, and we'll get those questions responded to, okay? So let's take a look now at some of the key concepts that you'll need to understand about futures markets, why you may want to trade these contracts, and what advantages you may gain by using these contracts as part of your trading plan. Now, before futures trading came about, any producer of a commodity, for example, a farmer growing wheat or corn, typically found himself at the mercy of a dealer when it came to selling their final product. So the system needed to be structured in some way so that a specified amount and quality of product could actually be traded between the producers and the dealers at a specified price. Okay, so contracts were drawn up between the 2 parties specifying a certain amount and quality of a commodity that would be delivered in a particular month. And in the late 1870s, a central dealing facility was opened up in the United States in Chicago, where farmers and dealers could deal in spot grain trading and immediately deliver their wheat crop for a cash settlement. Okay, so futures trading then evolved as farmers and dealers, committed to buying and selling future exchanges of their commodities. For example, a dealer would agree to buy, say, 5,000 bushels of a specified quality of wheat from the farmer in June of the following year for a specified price. And that way the farmer knew how much he would get paid in advance, and the dealer likewise understood his costs. And so that was really essentially the beginning of what we now call a futures contract or a future price. So it was all something that was all based around business and how can we standardize, how we utilize and grow and sell standardized commodities. Now, although futures markets have been around since the 17 and 1800s, based primarily in agriculture, it really wasn't until the last 40 years or so that futures markets expanded into what they are today. Now, some of the current futures markets, like the metals, you have copper, gold, and silver. There's livestock, such as hogs and cattle. You have in energies, there's crude oil and natural gas. And then you have the foodstuffs like sugar and orange juice, and the industrials with things like lumber and cotton. And modern day futures markets also include a wide range of interest rate instruments, currencies, single stock futures, and other index products such as the Dow Jones, the NASDAQ, and the S&P 500 futures. Okay, and you can gain access to all these futures markets through a specialized futures broker such as RJO Futures. So with the explosion then of futures contracts, folks began to realize that there was a very lucrative investment opportunity in trading these markets. You didn't have to buy or sell the actual commodity, wheat or corn or whatever it was. You could just trade the paper contract that actually held the commodity. Okay, so now with the popularity of these contracts and the electronic exchanges, futures are tradable and accessible literally by anyone with a computer or a telephone. And so people quickly realized that as long as they exited the contract before the actual delivery date, the investment would be purely a paper one. And this was really the beginning of futures trading, speculation, and investment, which it is today. Now, being that futures trading is available to a very wide audience, the question becomes, who really trades futures contracts? Who would I be trading against? And generally speaking, it's really two groups of people. First group are known as hedgers, usually those who have an interest in an underlying asset, such as farmers, importers, exporters, fund managers perhaps managing a large portfolio. These people are hedging against the risk of adverse price changes. For example, if you were a wheat farmer, you would have a strong interest in diversifying your wheat crop holdings in the event of some unforeseen catastrophic event that may impact the price of your crop. And so as a business person, a futures contract helps the predictability of your business with things like planning and budgeting, and enables these folks to better manage their underlying business interests. Okay, so same thing with a fund manager. They might have a large stake in certain stocks, and they might use the single stock futures to offset that exposure and that risk. And then the second group of people are speculators. Okay, so usually traders who have absolutely no interest in the underlying asset of a futures contract, albeit gold, oil, wheat, whatever it is. So speculative traders have no real intent on taking delivery of the underlying asset. They're simply looking to capitalize on favorable price movements in the markets. Okay, and they'll accomplish that by trading a futures contract. So the majority of the volume in futures trading is really being done by speculators for the most part. And the role that RJO Futures plays in this scenario is to allow you to join this group and express your opinion about a specific market of interest. Let's talk about some of the advantages of trading futures. And here's kind of how it works. In order to own a futures contract, an investor only has to put up a small fraction of the total value of the contract. And that value is usually something like around 10%. And what this is called, it's called margin. Okay, so margin creates leverage, so an investor can trade a much larger amount of the commodity than if you actually bought it outright. Okay, so if you've predicted the market movement correctly, then your profits will be multiplied, say, tenfold on a minimal 10% deposit. So this is really an excellent return compared to buying the actual physical commodity like gold bars or gold coins or even gold mining stocks. The margin required to hold a futures contract is not really a down payment, but it's actually a form of security bond. Okay, so if the market goes against a trader's position, they may lose some, all, or even possibly more than the margin they originally put up. But if the market goes with the trader's position, then they make a profit and they also get their margin back. Okay, so the real benefit here is a tremendous amount of leverage with a relatively small amount of capital. Okay, I'm just taking a look at some of the questions here. Joe is asking, was looking to see the RJO Futures trading platform. There are several, Joe. Another question here. Can their platform be programmed to trade automatically? Am I supposed to be seeing anything or just hearing? What we're doing, Joe, this is, and we've got 6 sessions coming out here. You might have gotten on a little bit late, but we're going to be going through, for the most part, understanding futures markets, and we're going to be getting into trading strategy as we move forward in some of these other sessions. So we've got another 5 of these sessions to go, and we're going to be getting into understanding technical trading, technical analysis, and actually looking at specific trade strategy setups. So we won't be going through and looking at specifically a trading platform. We can start to, if we have a lot of requests for that, we can look at doing something like that in the future. But there are some folks at RJO that can sit down and walk you through a number of different platforms that they have. And so I'll introduce you to that at the end. There's a survey, and you can request contact with someone that can walk you through all that. Okay. Another one. Is margin allowed in an IRA? Walt, typically margin is not allowed in an IRA account. Another question here from Ben, are these sessions recorded? Yes, they are. And let's see what else he's saying. I'm sure that I can be available at. Yeah, so the sessions are recorded, Ben, and you'll probably be getting a follow-up email, and this will be listed on the website, and you'll be able to go back and review some of the items that we've talked about. Okay. Okay, so moving on. Another advantage of futures contracts is that you don't have to literally store something like, gold bars in your garage or barrels of oil in your backyard or, live hogs or cattle for that matter. The actual commodity that's being traded in the contract is only actually exchanged on very rare occasions when, the delivery of the contract actually takes place, between producers and dealers typically. That's that first group of hedgers that I mentioned earlier. So in the case of a speculator, a futures trade is going to be purely a paper transaction, and the term contract is only being used here mainly because of the price, quantity, and then the expiration date being similar to a contracted future price of something. Okay. Now, one other advantage of trading futures markets is that they are usually fairer than other markets, like corporate stocks, for example, because it can be more difficult to get insider information on commodities, right? So futures are also professionally traded by traders around the globe, so they also tend to be very technical in nature. The open outcry trading pits, this is where you have lots of guys in yellow jackets, typically waving their hands and making specific gestures and shouting buy or sell, and this historically has offered a very public, efficient marketplace for trading these contracts. But now in the late 90s, electronic trading was launched, and this has superseded almost all of the open outcry trading pits. Today, I think it's maybe something like 10% of those floor traders actually remain. So almost everything has gone electronic simply because of the efficiency. And also in terms of any official market reports that come out based on some of the futures markets and commodities, these are released typically at the end of the trading session, so everyone has a chance to take the new information into account before trading begins again on the following session. Now, here are a couple of advantages for intraday traders. There is great liquidity virtually every day on these markets, simply meaning that there are large numbers of contracts being traded on a daily basis, which provides a short-term trader just very easy entry and exit on all their positions. Now, this liquidity ensures that market orders can be placed very quickly, as there are always going to be buyers and sellers of any particular commodity at any point in time. Now, another key component of any trading style, whether intraday or swing trading, volatility is going to be key. Without market volatility, you can't really profit that well. So with large volumes, we get good price movement, and that creates good trading opportunities for speculators. So in summary, the futures markets are very liquid, they're very tradable, and they're also very technical in nature. So all in all, these are just great contracts for the short-term trader. Now let's take a look at the various futures markets available to trade, and I'll go ahead and walk you through some of the details related to this. Within the United States, futures contracts are traded through the CME Group, This is comprised of really 4 exchanges now. It's the CME exchange, the CBOT, the NYMEX, and the COMEX. And there are a few other key futures contracts on the ICE and the NYSE Life exchanges as well. Now, the Chicago Mercantile Exchange, the CME, is going to be the largest commodities exchange, and it caters both to open outcry and as well electronic trading. Okay, so the main markets are going to be things like crude oil, foreign currency, and foreign currency futures, and then the index futures, so the financials. The Intercontinental Exchange, which is otherwise known as the ICE Exchange, has 2 key futures contracts, one which is on the Russell 2000 index, and the other which is on the dollar index. The NYSE Life Exchange has 2 great mini contracts on both gold and silver, and these are really popular with retail traders who want more flexibility trading a smaller value contract as opposed to the larger contracts for gold and silver that are traded on the COMEX exchange. Okay, so usually retail traders are looking at a lot of the mini contracts which exist across the board on not only the metals but on the indices and some other items as well. In the next few slides, we'll take a look at the most popular futures markets. We'll look at the contract details and then the various exchanges that they're traded on. And what we're looking at here in this chart are index futures. And these contracts are very popular for traders speculating on various stock market moves. So these contracts are also useful for hedging purposes, kind of used to balance a stock portfolio, for example. You'll see the futures contract symbol here in the second column, representing the underlying cash index in the first column. So, for example, the Dow is represented by 2 contracts. There's a large contract, and then there's the mini contract, the YM, which is listed here. And I only have listed the mini contracts here since these are really the most popular for most retail traders. But this YM contract, as you can see, is traded on the CBOT exchange, which is part of the CME group. Okay. And the tick size for this contract is a 1-point move equal to $5. So if you're trading, for example, 2 YM contracts and the price moves 10 ticks in your favor, then that's a $100 move on your account. Okay. And just for future reference, make a mental note of some of these numbers for the YM contract. We'll be using them a little bit later in the presentation, so at least you're familiar. And here's a look at some of the most popular futures contracts available in precious metals and their corresponding trading symbols. The large contracts here being the GC, the SI, and the HG for gold, silver, and copper, respectively. And for those looking to trade that smaller contract on gold and silver, here we have that the YG and the YI, which are some of the most liquid futures contracts available through the NYSE Life exchange. And the main difference here between the large and the mini contracts is a substantially lower value and quantity per tick, which enables you to trade multiple contracts and then control your risk better on your position entries and exits. And that's what professionals do fairly consistently. Okay, so gold is typically going to be a notorious safe haven for investors during times of market instability, like over the last couple of years back around 2008, 2009. A lot of instability in the economy and people really gravitating toward gold and really pushed gold to some all-time highs. So gold also has some industrial uses that may be familiar to you, such as the making of jewelry, technology manufacturing, and electrical components. More recently, silver has become a rather hot metal of choice simply because of the popularity of gold over the past few years and the bull market run associated with that. Let's see, copper has its industrial uses in commercial and residential building. So typically you may see a bull run in copper when the home building industry is expanding, since this is more of a supply and demand type metal. Platinum is another metal that is tradable. Don't have it on this chart, but its industrial uses are in jewelry as well, and its primary demand is actually in automotive manufacturing of catalytic converters, believe that or not. But these metals are all available on 2 exchanges, both the COMEX and the NYSE Life exchange. In the energy market for crude oil and natural gas, these contracts will be listed on the NYMEX exchange. There is a lot of popularity in the mini contracts among retail traders, again, especially the QM and the QN for crude oil and natural gas. Now, in this chart, you'll notice the dollar value appears larger for mini crude than for the actual full-size crude oil contract. But if you look closely, the tick size for the mini contract is essentially 2.5 times larger, which really enables you to trade crude for a lot less per contract to better manage your risk and to better manage your money. Okay, so actually you can trade the mini for almost half the price as you can trade the crude. So trading maybe 2 contracts as opposed to 1. Looking here at foreign currency contracts, the dollar index is going to be one of the most popular contracts on the ICE exchange, and that one is only traded electronically. The most popular foreign currency futures are going to be for the world's major economies, such as the euro, the yen, the pound, the Aussie dollar, and the Canadian dollar. Okay, so the CME exchange is going to be your primary source for all these contracts. For foreign currency trading, you really have 2 choices on this. Folks can either trade the spot market or they can trade foreign currency futures, which is what we have listed here. So whatever you're more comfortable with. The dollar index is an especially useful trading tool for foreign currency. This index represents the U.S. dollar measured against a basket of 6 global currencies. Okay, so this is a very reliable benchmark of the U.S. dollar, and traders use it to measure dollar weakness or dollar strength. Now, the range of futures contracts is going to be fairly broad, and it represents virtually every commodity that we use on a daily basis. The grains and the oilseeds, which are going to be items like corn, oats, wheat, soybeans, these are going to be traded on the CBOT exchange. Livestock futures, where you'll have cattle, hogs, pork bellies, so these are all going to be traded on the CME. And then you have your foodstuffs and industrial futures like orange juice, sugar, cocoa, coffee, cotton, lumber, and those are going to be traded on the CME exchange as well. And then lastly, you'll have interest rate futures. These are things such as 10, 30-year Treasury bonds, which are very popular as well. So that's really kind of a brief rundown on the available futures markets that have good volatility and are typically traded and most popular. Okay, so we went through an overview of the markets at a kind of a high flyover level. Now let's take a look at 2 very different styles of trading used by professionals in the industry. We'll look at the fundamentals and the technicals. Now, in principle, trading it's an easy business to understand, right? I think everybody gets that. I mean, that's what everybody says at least, right? Buy low, sell high, or if you're playing the market short, then sell high, cover low. But in actuality, when you're using a trading strategy to trade the markets and you're looking at things like, risk versus reward, you're actually buying higher and selling even higher, or you're selling lower and then covering even lower if you're going short the market. So the obvious principles of trading are, they're easy to understand, but they're not always what they seem, right? Trading can be very, I call it counterintuitive, simply meaning that, you're tend to be doing the opposite of what kind of a regular person would do. But unless you have a trading strategy to trade the markets, then you really have some way to make sense of what otherwise would seem to be random price movement in the markets. So if traders could always forecast the direction of the markets, then everyone would easily be profitable, right? But as any seasoned veteran trader will tell you, while always being able to identify the highs and lows, it's really just about impossible. Most traders do believe that they can make high probability trades using 2 methods of price forecasting. Okay, fundamental analysis or technical analysis. So whatever your style is, one of the keys is just to keep it simple. Either way, fundamental or technical, you don't want to get bogged down in a lot of analysis. It tends to be counterproductive. You'll never be able to arrive at a decision because you'll be looking at too many variables. But if you think of trading as a business, it's usually about the basics, right? It's about making sound decisions about business. And in some webinars to come that we'll be doing, we'll be introducing you folks some trading strategies that do just that. They help you to make sound trading decisions. Okay, so fundamental analysis. As we talked about, this is one method of forecasting price movements of, say, commodities. It doesn't matter what the commodity is necessarily. Fundamentalists are just interested in a couple of key pieces of information. How much of the commodity is likely to be produced, and then what will the consumption look like. So in this example that we have here, coffee, we're interested in really two things. How much coffee is going to be produced this year, and how much coffee do we consume? Okay, so if consumption of coffee outpaces production, then you place your trade on rising prices. And this is just basic economics. It's the law of supply and demand. So as demand for coffee increases, then price rises. As the demand for coffee decreases, then prices fall. Okay, so any sudden or forecasted change in the production of coffee is going to affect the supply, and then the price is going to respond in like kind. Okay, so fairly simple concept, but not as easy to forecast in real time as I'm making it sound, if you get my drift. So traders who rely on fundamental analysis are going to forecast market direction by identifying the geopolitical environmental variables. Okay, they trade when these variables suggest a change in price. So any trader who looks at anything other than a price chart is considered to be typically a fundamentalist or a fundamental analyst. So fundamental analysis is performed on historical and present data, but with the goal of making a financial forecast or a financial projection. Okay, so this would be typical of a long-term buy and hold strategy and not necessarily a short-term trade like a technical trader. So fundamental analysts overall will have sufficient financial resources to buy, hold, and sell positions, with really the operative word being hold. They have the desire and the ability to, wait for their investments to appreciate. But on the other hand, there are also traders who want to take advantage of price changes that happen all day long, all week long, all month long. And these short-term traders are not really satisfied waiting for fundamental news reports or interest rate fluctuations that may happen, once in a great while. These traders are usually technical analysts looking for more immediate changes in price, and how that information is then going to be reflected in something like a price chart. Okay, so technicians, as we're called, or technical analysis, is the discipline of forecasting future price direction through the study of past market data. Okay, so we're all about, as technicians, we're all about price charts. Technical analysts are looking for price patterns and trends in markets with the intent of then exploiting those repeatable patterns for a financial gain or a profit. Okay, and one all-time American great technician, Jesse Livermore, once said, "I learned early that there is nothing new on Wall Street. There can't be, because speculation is as old as the hills. Whatever happens in the stock market today has happened before, and it will happen again." So wise words to live by. Technicians then will use factors like price, they'll use volume, they'll use volatility to better understand and predict the future direction of price. Okay, they'll study price trends, support and resistance levels to then identify the next potential move in the markets. Okay, so that study involves things like various indicators, specific techniques to recognize what's happening with price, and then to utilize special techniques to manage risk and estimate the potential for reward of that possible move in price. Now, in part 3 of this webinar series, we'll focus on technical trading strategy, and we'll help you to understand what's involved, and I'll even show you a specific trading strategy that we use in our trading room to trade our own accounts. And if you like what you see here in part 3, then we'll be doing a complete advanced course focused on trading strategies, so you can learn 2 trading strategies for yourself to include in your overall trading plan. So the idea here is, if you have a couple trading strategies in your bag to use and a plan to trade them, then the next thing we'll need to look at is finding a specific market that suits you. Okay, so various markets are provided by exchanges located throughout the world, with some of the most popular markets being the exchanges that are located in the United States, in Europe, and in Asia. And as each of these regions are located in different time zones, then your geographical location is going to make a difference in which markets you most likely decide to trade. Unless you're one of those night owl people and you like trading at night, this quite frankly can be a 24-hour business if you want. But for most folks, traders in the U.S. will have access to the U.S. markets and part of the Asian markets at their open. Traders in Europe will have access to the European market open and the U.S. open as well. And then traders in Asia will have access to the Asian open and also the European open. And that's just how the times work out for anyone that wants to trade at reasonable times during the day. Otherwise, you can pretty much trade any market you want. As I mentioned, most popular futures markets are available to trade almost 24 hours per day. So as an example, Forex futures like the euro, the British pound, and even index futures like the Dow Jones and the S&P 500. These can literally be traded virtually around the clock. So a lot of opportunities here. There's something here for everybody depending upon where you live and when you work. Couple of questions here. I'm just checking these. Les is asking, would you have another webinar describing all available trading tools offered by RJO? Actually, Les, I'm going to be covering that a little bit at the end of this session, and I'll have a way for you to get some more information on that. So just hang on, and we'll get you there. Another question here: why are the YG and the YI the most liquid? Are they the largest and have the most volume? Joe, yeah, the YG and the YI on gold and silver contracts there, typically you'll find a lot of volume on the mini contracts, simply because you'll have a lot of retail traders that are adding to that volume, along with professional traders as well. So some of the other the larger contracts that are traded, they have a lot of volume as well, but they're typically traded by more institutional folks. So if you're a retail trader and you look at the comparison between the dollars you're going to have to put up for each contract, you're going to find it more beneficial to trade the mini contracts. Okay, so trading capital will be another input into your decision on which markets to trade. Now, in terms of the amount of money that you'll have available to trade, there are going to be some minimums that you need to be aware of, and this is going to relate to things like margin requirements that are set by both the exchange and your broker. Okay, so when you open your account, you'll deposit an initial amount of cash that will then be used to calculate your available trading margin. Now, depending upon the amount of your deposit, some markets, quite frankly, just may not be available to you because their margin requirements are going to be too high for your account balance. And so that's another reason why people trade smaller contract sizes or mini contracts. So as an example, a deposit of $5,000 is going to be sufficient margin for some of the popular futures markets with, a key focus on the mini contracts like the mini Dow, the NASDAQ, the mini gold and silver contracts. So even if you're trading a small account, you still have quite a few options and actually some very good markets to trade with good volume and good liquidity. So check out some stories on the net, like George Soros, Marty Schwartz, some trading greats who started out with very small accounts. Doesn't put you at a disadvantage. We're just giving you some information here on the appropriate markets that you should trade if you're on a small account, if you're just getting started, and then how to manage that and how to manage your risk. Another input into your selection of a market to trade is going to be how much a market's price moves up and down over short periods of time. Okay, so this is called volatility, and the more volatility in a market, the more opportunities you'll likely see to get involved in that price movement. Now, not all volatility is desirable, okay, if I can say that, but as technical traders, we're looking for controlled volatility. We're not looking for erratic price movement. That's kind of all over the place. We want to see market movement that is sustainable, market movement that's consistent, and price action that we can, look at a price chart and we can accurately predict potentially what's going to happen. Market liquidity is yet another factor in our market selection criteria. Okay, so this refers to the amount of volume or the number of transactions that occur throughout the day. Okay, so the most liquid markets you'll find are being traded virtually every second or more. Some of the benefits of trading markets with high liquidity, it does make it easier to enter and exit your positions, and in the end it's going to cost you less to do so because the spreads are going to be tighter. Okay, so some futures markets have increasingly more trading activity, and as such will have higher liquidity than some other markets do. So futures contracts that have less trading activity are going to be less desirable for speculators kind of across the board. But since high liquidity brings the bid and the ask prices closer together, the tighter the spread between the bid and the ask price allows a trader to profit by buying and selling at essentially smaller intervals, right? So closer profit targets are easier to hit. Okay, that's one reason. High trading volume and liquidity has a tendency to produce more precise charting formations that we use to enter and exit trades. Okay, so we're looking on a price chart, and all that volume and liquidity is going to create much better, more reliable patterns for us. Okay, so good examples of liquid markets would be the mini S&P, again the Dow indices, the mini gold and silver, crude oil contracts, other indexes like the NASDAQ and the Russell. So all of these have very good market characteristics in terms of volume and liquidity. Now each market that you look at will have a little different tick size and tick value per contract. Okay, so a tick is going to be the smallest increment that price can move for that particular contract, and the tick value is then the amount of money per tick size. All right, so for example, the mini Dow contract moves at $5 per tick. Okay, so each tick being 1 point on the Dow index. Remember we looked at that on that one chart. The mini S&P contract is going to move at $12.50 per tick. Okay, so each tick being 1/4 of a point on the S&P index. And then the Euro futures contract has a tick value of $12.50 as well, which means that for every 0.0001 that the price moves up or down, the profit or loss of a trade is going to increase or decrease by $12.50. Okay, so that's the importance of understanding ticks, the tick size, and the tick value. Okay, so the higher the tick value, the more money can be made or lost on each price movement. So newer futures traders should really look to start trading markets that have lower to medium-sized tick values. So it'd be markets like the mini Dow or the NASDAQ. And there are a number of others. The gold and silver contracts are kind of the same, and so those would be ones that would give you the ability to manage your risk a little better when you're just starting out. Just looking at the questions here, we've got one coming in from Stephen. Are mini corn, wheat, and soybean contracts easy to get in and out of? In other words, are they very liquid? Yes, they are. So when you look at those contracts and you're interested in trading some of the agricultural products, you'll get a lot of good price movement, volatility out of soybeans. I think they're probably one of the most volatile out of all the others. Corn tends to be very consistent. Rumor has it in the industry, if you can't make money on corn, you just better quit trading. But so yeah, so those are all good products to trade. Again, the most popular ones that people are trading are going to be the indices. So you got the Russell, the Dow, the S&P, the NASDAQ, and then gold, silver, crude oil, natural gas. Some people trade. That's been on a major downtrend for quite some time now. But yeah, there are a lot of great markets to trade. So wouldn't rule anything out. Sugar's been a great market as of late. So there's all kinds of different options, and one of the things I'll be going over at the end is RJO does a lot of great stuff on their website in terms of research on all these markets. So to get exposure to these markets, start to understand how they work and understand some of the fundamentals of those markets. There's a lot of great research on the website, and I'll show you how to get a hold of that at the end here. Okay, so by selecting a market that suits our ability and cash position, okay, we're effectively managing our risk, right? Okay, professional traders, one thing they do very consistently is they manage risk first and foremost, right out of the gate. The risk per trade will be the amount of money that you're willing to risk for each individual trade. Okay, so as a general rule of thumb, the way we trade at Trade with Precision, all trades will have a maximum risk of 1% of our trading account per trade. Okay, so this is just, fundamental money management. You can still create wealth by risking just 1%. There are, limitless possibilities here, as well as consistency. It's probably the main reason compared to, trading, taking really high risks to try and make high returns that reap, really large rewards. That just tends to be a losing proposition. It only takes one loser to wipe you out. So you want to be consistent, and you want to have some basic formulas and principles to manage your money and manage your risk. Now, the example here, say you had a $50,000 trading account. Okay, so the maximum risk that we're willing to take or to lose on any one trade would be our total account value of $50,000 divided by 100, which is going to give you a $500 risk. Okay, so that's that 1%. So as the account grows, then the risk per trade can increase as well, right, if you just redo the calculation. And likewise, if the account drops in value, so would your risk per trade. Okay, so the idea here is to, make money slowly in the markets. If you're making money too fast, more than likely you're probably doing something wrong, and chances are pretty good that you're taking on, far too much risk. Make sense? Pretty important concept there. That's what's managing risk and working out some of these formulas in your own trading is really what's going to keep you in the markets and keep you trading for a long time. Some folks will make a lot of money very quickly, and then they're going to lose it in the same way. Another thing to consider when selecting a market or a trading style is to assess your personality. This might sound a little odd, but let me kind of walk you through this. Do you thrive under pressure? Or, does something else happen when you're under the gun? Can you make good decisions quickly when you're looking at a lot of different information? I mean, can you synthesize it, and can you get to a choice? Or when you fail at something, do you tend to recover quickly, or do you kind of, linger on the failure? Do you have the ability to think on your feet? When things are moving fast around you, do you get rattled easily? So your answers to all of these questions are going to tell you if you should, day trade, or if you would be more comfortable swing trading. And really knowing yourself well is going to go a long ways in choosing a suitable market for yourself by, matching your person with the style and market that you choose to trade. So let me just wrap up here with a few more slides on how to get the most out of your futures broker, what things you need to know, and what you should look for from your broker. Now, as you know, working with a futures broker provides you with a way to access the futures markets, right? That's the only way you can do it. So if you plan on getting involved with this market, you'll need to choose a good futures broker to work with. Now, when you're choosing a broker, you should do some research on your own to better understand how they stack up. One of the first things that you should look at is the reputation of the broker in general, and how do they compare. Okay, do they provide the resources that you'll need to be successful? So we've talked about a lot of stuff here today. So when you're looking for a futures broker, check out the RJO website and look at all the different resources that they provide. Talk to one of the brokers on site, and help them come up with a plan to to get you started. R.J. O'Brien has been around for a very, very long time. One of the key resources that RJO Futures brings to bear as the futures broker is they bring to bear people and expertise. So that's expertise in futures, in options, expertise in foreign currency. And that's really, why we're talking to you right now, is to help you create a solid foundation for success. Okay, so RJO is making an investment in these education courses to, to help you and to help you be successful. A couple of things you can expect here from RJO. Research, I mentioned before, on a wide range of markets that you may want to trade. They offer managed products for futures and Forex as well, and they also have self-directed programs, which is what we're kind of a part of here today in terms of this education segment and showing you guys how to make your own trade calls. The RJO Futures staff are big believers in knowledge and information. Okay, so combining those key fundamentals with solid technical skills to help you make better trading decisions. Okay, so again, timely research is an important part of that whole support network. One other thing here, take a look at the website after and look at the eView research report, which is a good futures market resource for things like education, market analysis. There are trade recommendations in there for you as well. It's written by RJO's professional futures trading brokers, so you're getting some expert commentary here and some actual trade recommendations. Expect personalized services from RJO. They really place a major emphasis on a working relationship with the client, and one way to begin that relationship is with an initial one-on-one meeting with an RJO broker, if you like, and they can help you to explore some options and some tools that may be of value to you. If you'd like to do this one-on-one consultation, just fill in the appropriate information on the survey as you leave the webinar tonight, and we'll get you set up to talk with a broker. Now, we understand that each of you have, a unique situation, a unique set of circumstances, and RJO is, looking to reach out through these educational webinars to really better understand what you're looking to accomplish. So as opposed to just jumping into trading a market, these folks are here to help you do some planning, take advantage of the resources here. It'll be well worth your while. For those of you that are leaving the webinar at this point, there's a short survey as you exit. Please take a minute to fill it out and let us know if you found the content useful. We're always trying to improve and deliver content that's valuable. If you would like to have that one-on-one consultation with a broker, just let us know in the survey. There's some questions there for that, and we'll follow up with you to do that. For those of you that still have some questions, I will stay on a while longer to get those answered for you. So let me just take a look and see if any new questions have come in that we can respond to, and be more than happy to answer those for you. Ben's asking a question here. Do you guys use market profile as one of your trading strategies in these markets? Ben, we really don't. We have about 7 or 8 trading strategies that we use in the trading room, and none of them use any market profiling. We're looking specifically at technical information on a price chart. We're looking for certain patterns in certain setups, and the way price moves around the averages and the way it sets up in different ways. And even some of the indicators that we use, we're going to use them as leading indicators. We typically don't use them in the way that they were normally meant to be used, put it that way. Larry's got another question. If I can't make the webinar, will the webinars be available to watch? We're doing a total of 6 webinars, Larry, so the final 3 will not be recorded and on the website. They will be recorded, but they'll only be for RJO clients, if you will. The first 3 are available to the open public, so there are 2 more that you can attend, and they will be recorded, and I believe they are going to be on the website, and I'll take a little time to walk you through the website right after we get through here and show you where all this stuff is. Another question here, Pammy, what kind of trading platforms do you provide? Is there a platform to do trend following? We're actually going to show you 2 strategies in the advanced course, Pammy, that we use quite a bit to trade our own accounts, and they are 2 trend following strategies. So we'll show you how to buy a pullback, and we'll show you how to buy a breakout, and then all the parameters to do that. So I would highly recommend you look at the advanced course if you're interested in that, and I'll take you to the website and show you guys how to get signed up for that stuff. In terms of the trading platforms, I'll also show you those on the website as well. There are probably I guess about half a dozen of them. Ben, do you use any proprietary indicators? No, Ben, we use stuff that's right out of the box, stuff that indicators that exist on any platform. So there isn't going to be anything else that we're not trying to sell you anything. We're just trying to teach you how to read price action. It's basically what every professional in the market does, and we'll show you how to do that. Let me just pop up the website here. Okay, so this is just the front page of the RJO Futures website, and so any of the latest things that you can sign up for are going to be like today's webinar was right here, and you can register for that. Otherwise, just come over to I believe it's resources, right? And it should be Learning Center, and then right here under webinars, you'll get a listing of everything that we're doing. Okay, so as you scroll down here, that we have descriptions for the first 3 segments that we're doing, and if this one was a little too basic for you, we're going to step it up on the next webinar, and we're going to step it up more than that on the next webinar. These two, most of you guys, if you're interested in a trading strategy and you want to learn one, we're going to be giving you a complete overview of 2 different trading strategies, how to identify and trade a strong trend, and then you're not going to have all the information to start trading it with real money just yet, but if you want more of that, do the advanced courses, and we're actually going to get into those 2 trading strategies. We're going to spend 3 sessions just on trading strategy. We're going to get you set up with checklists. We'll help you understand all the ins and outs, all the different factors. So when you're looking for a trade setup, there are going to be 8 things that you're looking for before you decide that this is a trade that's worth taking. And then there are going to be some bonus factors that'll help up the probability of each one of those trade setups. Okay, so it's pretty good stuff. So that's those are the webinars, and these are going to be repeating for over the next 6 months. So if you miss it the first time around, you can catch us the second time around. Somebody else was asking here about platforms. Let me see if we can find that for you real quick. Trading platforms right here. And so here are a number of platforms that you can use. RJO has some of their own proprietary platforms that are pretty good. And then you have some of the other standard third-party platforms like NinjaTrader and CQG and some of these other ones. Okay, so really about when you go through and look at the trading strategies that we use, I mean, a platform you're going to want to link up with is one where you can look at multiple time frames. You find that if a platform doesn't do that, you're going to have a hard time following the strategies. Okay. Ben's asking, where on the website are the recorded webinars? Well, Ben, sorry to say that this is actually we're just starting this program this year, so this is actually the first webinar that we're doing on these topics. So this is brand new content, and more than likely it's going to come up probably under the Learning Center, and I believe there's a spot down below that says Archives right here, and so there are already a number of other different ones not related to what we're doing on these 6 sessions, but you'll see them pop up here as we get them recorded and as we get them uploaded. So I imagine it may not be up tonight, but it'll probably be up, the recording, maybe tomorrow or within at least 24 to 48 hours probably. Good enough? Okay, we still have quite a few people on the call. Any more questions I can answer for you guys? Don't forget, as you leave, fill out that survey for us. Since this is the first time we're doing this content, we want to make sure that you guys are getting some value out of it. So, if you like it, let us know. If there's some things that are too rudimentary, let us know that as well. Sometimes we can't please everybody, but we do want to hit the majority, kind of the middle of the road, and make sure that everybody's got a good, solid foundation to launch from in terms of futures trading. Another Drago's asking here, is there a practice account? And Steve, if you're still on, I believe there is a practice account because actually I have one, so I know that for a fact. And let's see, Les is asking a question. Would you have another webinar describing all available trading tools offered by RJO? Les, that would be a one-on-one consultation with an RJO broker. So as you exit, you're going to have a survey pop up. Just go through the questions on the survey. There's only like 6 of them, and one of them is going to give you a place to punch in your telephone number and a date and time that you'd like to have a one-on-one with a broker, and then they can walk you through everything that's available at RJO. So even if you don't want to do your own discretionary trading or your own self-directed account, they can talk to you about their managed services and a lot of other things that they do. Yeah, Les, as soon as you exit the webinar and leave, the survey will automatically pop up. So don't worry about that. It'll hit you right in the face. Let's see. KW is asking about broker fees, and let's see. Broker fees are. That is a great question. I'm going to have to get back to you on that one. All of these questions that you guys are asking, we are going to get a listing of these, and they will go over to the RJO Futures customer service folks. So we have your email address, and we'll get a response to you on some of these questions that we're unable to answer. But let me take a quick. Maybe it's probably not under margins, but no. I don't have the information for you yet on commissions, but they are competitive in comparison to other brokers out there. Let me see. Did I miss any questions here for you folks? Let's see. I think that. Oh, here. Okay, Steve. I have one of the RJO folks online. The commissions and the fees, they range depending upon the services provided. So RJO Futures provides a lot of different services. Not that you have to take advantage of all of them, but they offer a lot. So it's really going to depend on what you want to do. So I'd guess that the lower range of that would be on a completely self-directed account. It'd be very competitive with anything else you'd find out there. And then on the high end, it would be probably like a managed services, like a managed future where somebody would actually manage the trading of your commodities futures. Okay. Let's see. John's asking, how do you figure the strike price for a futures option? John, we're going to be talking, first thing we want to do, John, before we're looking at options and a strike price, we first want to find out in the underlying market of that futures option what the price action is doing, and we want to look for a trade setup, and then we want to start looking for that strike price. So in the advanced education course, we're going to show you all the underlying detail of how to identify that trade setup in the market, how to identify your risk, which is your stop loss, how to identify your entry, and then how to identify your profit target. And once you're able to identify a profit target, that's going to help you identify then a strike price for an option. Okay. Thanks for the compliments, Robert. You guys give me a lot of compliments. I appreciate that. I'm glad you guys are enjoying this. Let's see, from a bunch of more questions coming in. I guess I'm not doing a very good job of answering the questions. You guys keep asking them. Let's see. Does one account allow one to trade both futures and Forex? Jeanette, usually a futures account is for futures only, and then a Forex account is separate. Yeah, that's pretty standard. Steve, if that's any different, let me know. Robert's asking, will you discuss when is the right time to move to the next contract month? Yeah, Robert, there's actually, if you're, it's actually pretty simple. It changes automatically on your software if you have a continuous contract. So if you're using a platform that uses a continuous contract, a good example would be the mini contract on the S&P 500 future, which is, the symbol is ES. So if you're using the @ES symbol, that is going to be a continuous contract. And so it is the second, I believe it's the second Thursday of the month where the contract moves over to the new contract. And so for the S&P, the futures contracts are quarterly, so that rollover only occurs every 3 months. Okay, so you just want to get the 4 months in the year when those contracts expire, and then look for that second Thursday, and then that's going to be the rollover day. Let's see. Ben's asking, so you have to open an account with a minimum of 5K to access the last 3 webinars. Ben, you just need to be an RJO client. That's all. Yeah, there's no minimum that you have to deposit or anything. We're trying to give you a solid foundation here. If you want to get into futures trading, we'll show you how to do it, and we just want to make sure that there's a group of people that are committed to RJO, since they're paying us to do this, to provide the education. That's what we do for a living. We trade our own accounts, so we're willing to share with you what we know and what we do and how it works. And so, open up an account. At least you'll get the education from us, and you can do a consultation with an RJO broker and see where it goes from there for you. Les is asking, so the currency trading has to be done via Forex separate account from the futures account then? Correct. Correct. Okay. Okay, I think that's the end of the questions. We're pretty much on time. We've gone a little bit over the hour, but if that does it for anybody, we'll close this out, and make sure if you liked what you saw, we're going to be stepping it up a notch in 2 weeks on the next webinar. So get yourself signed up. More than likely, you're going to get an email if you are on this webinar that will give you the invite for the next webinar, and we look forward to seeing you there. And we'll teach you one of the trade strategies that we have, and kind of walk you through that, and you can judge for yourself. Okay. Hey guys, thanks for all the compliments. Appreciate it. Thanks for the attention, and please do fill out those surveys and let us know what you thought. And we'll look forward to talking to you next time. Okay. Thanks a lot.